All right, let's jump into it. Where we at? 10 o'clock, smack bang, pretty much right on 10. What are we at? The 14th of August. So ticking along, almost halfway through the month now, or pretty much halfway through the month, spot on. But look, let's start off with gold because we're sort of seeing it really just sort of consolidate up around underneath this sort of resistance level that we've got sort of marked out over here. We did see, as I said yesterday, sort of like, we want to see a close out the top here. This is where I'm calling that the stops are going to be. Whether they're there or not, well, we've got to wait to see what happens when price shoots up there to sort of see how the market reacts. But you would think there's a lot of people that particularly have been trying to short it. They got their stops over there. Whether they've been shorting from right up here and they're just protecting themselves, or whether they've been trying to sort of short it into this move up along the top side over here as well. This is the area where you've got to start to think, okay, well, maybe I've got this one wrong through this section, and they don't want to be holding necessarily if we do see this measured move play out to 2600. So, at the moment, we're really just consolidating. If I zoom it in a little bit more, we can see that, look, of the two little directions that we thought, look, it was either sort of going to pop through, back test, go through. This could still be valid. I think this is, sorry, is still valid. So we can move it along a little bit because, yeah, as I said, this isn't the exact course that it's going to run. It's just more an idea that breakout, back test, new high, fail. You know what I mean? That moves through like this. This is where we're kind of seeing things happen. And I said, if you go back to the videos that I did last week, I was saying where we were down here, and I was saying that, look, we broke up here. We're going to find a spot, come back test, and use that as a launch pad. That is exactly what we've got. And we have sort of found, so if I had this maybe on the 1 hour is how I had it. So I had it, the body fills over here as the pullback. And if we just move this out of the way for a sec, you can see actually over here, top end of this little wick over here, bang, that previous high, which is the wick, not the body fill, came back and provided, one, two, three, four tests to hold as a little bit of a support overnight. So you can put that up there like this for now because we know that the buyers, they're not waiting here. The buyers, they're waiting here, which is very similar to this level. Actually, very similar. It's within, half a buck or so. So, yeah, look, it got its move through here. We had a little bit of US data out last night. We had the PPI numbers, which is the producer price index, and that are different to the CPI. So the consumer being the end user, end sort of place where generally inflation sort of trickles down to. Um, that's tonight. That's CPI. And just while on that topic, we can have a look. We're expecting 3% as a headline number to sort of stay the same. Month on month, a slight tick up. So we'll have to see how this plays out, of course. But the idea being is you've got producer price index, so the price of the money and the cost that the producers are feeling in terms of inflation. That's the PPI, and that came down. So in theory, if the inflation and the costs are coming down for them, well, not so much coming down. This is the thing that I think a lot of people don't quite realize. Well, it's not that the costs are coming down, it's just that they're accelerating, excuse me, at a slower rate. So, when you're seeing a sort of a weaker sort of number for the PPI, well, in theory, you should think that, that may be flowed on to the consumer, the end user, which is, the consumer. So that could be giving people a bit of a sniff that you're seeing CPI sort of come in a bit lower as well. And just on that quickly, I'll just go flip across the DXY. You can see the reaction of it as it came out. US data, it came down here, and this is the point that I'm saying with it all. If inflation's coming down, they're already talking about cuts, and then, as I said, the big drivers that they're balancing are inflation and recession. If inflation's coming down, then recession is the main topic because you've already somewhat, you can't see me doing the inverted sort of air quotation marks, but if you've beaten or at least temporarily solved inflation, well, recession's the next one. And you got to think, okay, what's the flow on from that? What's going to make recession a little bit foolproof? And that, well, that's sort of like you don't want businesses going bust. You don't want sort of people unable to borrow, to unable to hire, to unable to produce, to manufacture. So how do they stimulate that? They stimulate that by lowering the rates. And as we know, if you lower the rates, that's what is detrimental to a currency because people will borrow more. There'll be more money in the system. Each individual dollar is worth less. Just because you add more money into a system, into an economy, doesn't mean if you add 100 billion in, doesn't mean it's worth 100 billion more. It just means every single one of those little slices of the pie that were the dollars, they're worth a little bit less. And that's why you see inflation, you see currencies move down on, firstly, well, mainly actual interest rate sort of cuts and lowering. But in this case, CPI, PPI, these kind of things are little pieces of the puzzle that you plug in and you go, okay, well, but I mean, if CPI's come down, as I just explained 2 seconds ago, CPI's coming down, recession's the main topic that they got to avoid now. How do they avoid the recession? Well, they do it by cutting rates. Oh, okay, well, they're going to cut rates. Well, that means the US dollar is going to weaken, and boom, this is how you get this move that comes out like this here. So that's just a little quick snippet of how that sort of all plays out with it all. So, I mean, CPI tonight, if you get CPI high, well, you'll see it move back up because people will sort of go, oh, hold on, wait, maybe, it isn't quite solved as much as we thought it could be. But anyway, that's just explaining that move there. I'll get on to DXY in a moment. Okay, back to gold. So gold, as we can see, it's really just sort of consolidating this level up the top over here. Before you get these big bits of news, like I said, the CPI coming up, we saw PPI move it a little bit, but CPI is a more regarded bit of data by the Fed. So before you get these large bits of data, very rarely do you get sort of major breakouts. So yeah, we saw it try to go, but then obviously dribble back down in here. So I would expect that today we don't really get too much. Let me just pop one button there. Let me put one of this over here. This is kind of put a little breakout box thing on it. Where we go, breakout box. This is kind of what I'm expecting throughout today. I don't think we're going to get a major breakup. You may get a little bit of a move down to the bottom side as a shakeout, but certainly don't think we're going to be getting any major breaks prior to the news. You get the news, that's the driver. It changes the landscape, and that's when you see people alter their positions, and that's when you get the big rocket candles. So yeah, not a great deal for it at the moment. Just on metals, flip across, we've got silver. Silver sort of really dancing around. I was trying to find what it was working on here. I mean, this could have been a little bit of a wedge. We broke down here. It's surprising as well because, I mean, the weaker number there, you would have sort of thought that, that's better for your sort of manufacturing risk and all this kind of thing, which are the kind of more of the drivers for silver. But that sort of broke down, and then as you can see, it's just bounced back up here. So we can sort of delete these ones here because that's not really. Oh, that's right, we've disconnected. Bear with us 1 second. Yeah, there we go. So yeah, we're not really sort of getting a great deal through here. One thing that we are sort of respecting at the moment is this bigger falling resistance, which we sort of called out yesterday. So we were coming into it yesterday. I said 11 o'clock was going to be that time that we get the sort of volume coming in. Volume came in, and bang, they sold it down. And really, it's just, again, it's consolidating these areas over here. This is the kind of thing similar to just going back onto gold for 1 second. This little area here is what we had coming into the end of last week. This was a little sort of consolidation period underneath a known support. So support being resistance. So consolidating under the resistance area. And this is the thing, I was actually talking to a guy on X, and I was sort of saying that, you know what I mean? Like, to me, it wasn't really so much of a sort of breakdown. It was more just exactly that. Like, it was just rejecting, but not actually sort of rejecting sort of down here. It was just consolidating. And as you can see, come Monday morning, bang, we fired up here and sort of came up through to these next levels. So yeah, at the moment, still butting the head against this falling resistance. It's come back in a lot quicker because, I mean, if you look at how far and in between and how big these rejections have been in the past, when it's come into contact with this falling resistance, it's been quite large. And if you wanted to see a sort of full continuations, this is not to sort of say that it can't obviously sort of reject and sort of just go back on with the story down here. I don't think that's going to happen, but you know, there's always, you got to consider absolutely every possibility. But the idea is that sort of if you see how big these rejections were here last time, rejected here, came back down into a little support area. This is where we had the congestion on Friday, the little consolidation, and it's fired back up and it's testing in there again. So now it's just given us a little bit of a closer, sort of more short-term swing high. So it just sort of means that if we get out of here and we take out those highs from yesterday, which is above 28, we've got room and we've got sort of validation to sort of say that, okay, here's a higher high. Well, we've already got higher highs, higher lows in this one part of this move. So this is one move inside a bigger move, of course. So in the short term, above 28 or 28.10, call it like that. And then we're going back up. You know, this is probably a fair level that we can see. Previous times the sellers pushed it down. That's where we'd be heading. Above after that, we look up over here. They're the two sort of short-term targets with it all. Now, if you get above 29, that's your swing high. Like this, as I said, this is just a smaller move inside a bigger move. If you break out of this channel, this becomes the area you need to beat. This one here. So this becomes your swing high. So this matched out over here. This is why we put a bit of a price target into this area, is because there's a good chance that we've seen the sellers defend this line on the way up and even just a couple of cents above it as well. There's a good chance they're going to do that again. As I said, these things never run through first time, unless you get a super catalyst kind of thing and something that really is bullish for it. Most likely it's just not going to do it. Like people are going to go up, whether they're getting long up here, whether they want to try and short more, they're going to try and push it back down from that level. So you're going to see a reaction from this level. That's the thing. Again, none of this means that it's not going to go through here. But you look at these sort of things like this, then this could come all the way back down here. You don't know. It could come down to here, could come down, retest these highs over here. It really depends what the landscape is at the time and that. What was the driver to push it up here? Was it just general price action moving it up to this level? Or was it sort of like a big news-driven thing? Did we find out that sort of like, you know, they've done emergency cuts or something and I don't know, whatever's going to stimulate silver to move along, is that the big driver and it's just going to power through there? Doesn't really matter. What you want to do is sort of you want to pay attention to it when it comes into this zone. You want to take a bit of profit if we're long through here. And then as it comes back down here, look for it to base. Look for it to sort of find a little bit where buyers aren't sort of sitting, you know, buyers will move up, buyers will move up, buyers will move up. And then you want to see buyers, buyers, buyers. And you want to see the market hold a certain zone. And then when you see that, you know that they're going to target this level again. And it becomes a tussle between the buyers, between the sellers. And when you see those sellers like depleted, price will overrun it. And that's the next leg up. So that's the price structure way that we're looking for it here. But again, I do a lot of this sort of stuff forward thinking with it all. Short term, get above 28. You know what I mean? 28 up to 28.60. This you could see move. A fairly easy move. Again, it's 60 cents or so, or what are we at? About 80 cents or so now. But again, you're not going to get any major breakouts prior to big bits of news like CPIs. So yeah, there's still obviously a little bit of work to be done. It's still technically in a down channel, a downtrending channel. So you know this is still a possibility to come down here. But the fact that it's consolidated, back tested, it's really pushing against this falling resistance. I would say it's even worth a shot, even if it comes out here and then sort of dribbles back down here. I think in the short term, we do have some more upside with silver. All right, flip across. We got Aussie powering through. So this is Aussie, as we can see, a fairly well-defined area of where we knew the sellers were. And this is a perfect example of what I was just talking about. We saw the sellers were here. We marked it out. Here they are again. Here they are again. Even a third time coming through here. If we zoom this in, you can see here's the break, here's the back test, and then up, 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 up. So nice little move up over here. So now, again, we've got smaller zones. This is on a 1 hour. So depending what style you're trading, there's some sellers that we know are going to be here, mid 40s. You got a little congestion area here, could be some. I wouldn't worry too much about it. It could, look, anything could happen. You could get around the 60s. Aussie always seems to have a problem around the 60s. It doesn't matter which way they're going. So I'm going to put a little zone through here. I'm not putting too much emphasis on that one. But then you've got lower side here, and then you've got this little crossover area through here. So you start to build some like sort of levels that we could expect to sort of see some action. And this is all based off what we've seen in the past. If we look, then put it onto the 4 hour, we can see, has it really shown up so much? We can see that sort of buyers tried to hold it here, and then it got crunched through. A little bit of a congestion into this side bit here, into this little sort of downtrend before they went through again. So again, we're moving up along here. I would say probably we have a couple more points, about another 10 points or so in it, maybe, before we see a little bit of a cooling off here. But again, if we see DXY sort of sell down a little bit further and further, then we can see that sort of play out a bit more. See what I had on the other Aussie. This is a good little sort of back test thing. Here we go. Here's the sellers, break through, back test, and on the way we go. So yes, look, Aussie has really been firing up since this negative divergence that we called out last week. This was this is what's called capitulation and that. So where it's been absolutely hammered, and this was the be all end all. This was an insane move as it was happening. But there's a lot of people that maybe tried to get in short here. They smashed out everybody. This was a new yearly low, pretty much, I think. So, that's anybody that hadn't been sort of taking profit through the year and have gone for some technical stops, bang, they're taken out. So, look, I think there's still a little bit more upside in this move. As I said, we're coming into a very sort of busy area previously. And this is what we're starting to see here as well. So let's drag this stuff over here a little bit and sort of see what matches up. So we can see that certainly this last part, like this whole area, was a couple of weeks of congestion. This is on the 4 hour now. But most recently, apart from where it just cut straight through, you can see that these defined areas, 6680 and 6640, were areas where, let's clean this up a little bit. We had some buying here, buying here, buying here. We had selling here, selling here, selling here, selling here. Yes, you had this little drop out here kind of thing. I think this may have been a news-driven thing, but as I said, that's what Aussie loves to do. It loves to do these drop out parts and that. I'll go back into a few other charts and that in a bit with Aussie, because it's very known. And this is the thing as well why I sort of say, trade specific things, because certain currencies love to have certain little kinks in that, and you start to pick these things up after a while. But you've got a nice little range coming up through here. So it stands to reason that you're going to find a little bit of selling as you come back into this area here. Now, you found a little bit of congestion in this area on the way through. A very small amount of support here, as you can see, lined up with this lot, trying to hold on the way down. But that, I mean, if you just look at the speed and the strength of that, this is never going to hold any of this sort of stuff. So I would say that sort of like, typically I think we do have a little bit more upside. I think sort of 66.80 would be a reasonable sort of short-term target, getting back up above here. But again, it was very smooth all the way down through here. So look, I myself are just waiting to sort of see how this plays out, because you've got two sort of charts love to replicate themselves. And this was incredibly back and forth. Like this is for, that's 48 days. Wow, was it really that long? Jesus, it's a month and a half within a 2% range. You know what I mean? Like that was a very, very sort of congested sideways period here. So it's a lot of tussles, buy, sells, buy, sells, buy, sells, and obviously, they took it up here before absolutely smashing it back down. So I want to sort of see, does this fast move here negate the back and forth that happened over here? I would say yes, it does. I would look at the more recent price action, which is this smooth cut through this area, and expect another smooth cut back up through here. Because I think anybody that was long that was trying to hold shorts, they got out. Anybody who was short, they're already out over here. So I would say I'm looking more for this price action here to be replicated here, opposed to this big congestion area and a big sideways move, sort of through this period over here. But we'll have to sort of wait and see. And this is the whole point of doing these videos, that we can sort of document it and then, learn from it for future. But certainly at the moment, I think it's got a little bit more upside. It's coming into this little resistance area. If it can pop up about above 47 in the short term, you're looking 66 and then 85 as your short-term targets moving forward. All right, so get across DXY. Put it back on the daily, because this is what I was saying. When was it? Maybe, was it Thursday? It's one of these ones. What's been this day here? So where we at? This is Thursday last week. I think I sort of, that's right, yeah. So I was saying that these are your high lows, and the break of this was going to be what determined it. Then yesterday, or the day before, I can't remember, somewhere, I moved this up and I sort of said that, look, now that we've got a more defined bottom over here, a break of either of these red lines is going to give us our next direction. We know that the sellers are sitting here, and this is what I said. And if you look at yesterday's video, this is exactly what I was saying, that how these things work. So remember, they come down, support, come up, resistance, they attack the lows, break through, cycle starts again. Support, resistance, attack the lows, comes through, cycle starts again. So now, this is exactly what we had happen. We had support, moved up here, resistance, as you can see, we knew the sellers are here. That's why we got it marked out. That's why we go, okay, now we're going to target the body fill on these lows down here, and it careened through. Yes, and this is news driven as well. So you could potentially see a little bit of a top wick here before a further move down. The next target on the downside would be this this wick fill down here. That would be your next sort of target for a downside move. Though in saying that, it's not to sort of say that you can't see a little bit of sort of reprieve from last night's move, and a little bit of a sort of a shift back up, at least to make a top wick before it was to sort of come back down here. And this again is based on the idea that CPI comes in low. If CPI comes in high, well, what you could probably do then is just go like this and call this a bit of a range. And then again, we'd be targeting this area up over here. Really depends how strong the CPI comes in. If it comes in very strong, like as in high, like as in we still have to deal with this inflation problem, meaning we can't lower the rates right now, then you're going to see people go, well, there's still a little bit of juice in the US dollar. Let's give it another go. And you're going to see US dollar move up a little bit. But if it comes in low, well, that's just confirming the story that rate cuts is going to be coming sooner rather than later. They're going to be their main focus is to be fighting recession. And in fighting recession, they're going to be cutting rates. US dollar is going to come down. This is your area here. This is your first target. Underneath that, you could see a very fast move down. We really are in a little bit of an area. If we sort of drag this stuff across here and go, where have we seen? So put it about here. That's a bit of your support. And then down onto here, really, you're looking down here around the 108 area. So yeah, I think certainly it's, the buying pressure wasn't really sort of coming. I mean, look at this move back up here, and you barely got this sort of buying pressure coming up at all. So that's more of sort of like people just sort of taking profit and balancing the positions over here. So yeah, I think they're the lines that we're looking for right now. Come down here, take out the wicks. This is your little support area. We've seen the buying from this is back in January. So you take out these ones here. Remember, we flew off the highs. Flew off the lows like January 1st, and it just went up and up, 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 up. So this is really coming back down. So this on a, do I have yearlies on this? Yeah, 12 month will be a nice big fat top wick on this. So this, if we go underneath these levels here that I've just sort of marked out and shown a second ago, you're looking at flipping your yearly candle and then potentially sort of driving down further. So, there's a lot of downside to come if they do get underneath 99.5 on this chart. So that's your real big sort of breakdown level there. Anyway, again, that's super forward thinking. Well, not super forward thinking. It could be happening in the next week or so. But anyway, the short here and now. Let's get onto a lower time frame with the 1 hour. We can see sort of this is a little area. We can see with support. It broke through, closed down underneath here. It's had one test coming through here, right in the morning, so that doesn't really count. And it tried to push down, and so it moved up along here. If you take out this little wick, then I reckon we could see a little bit of a drag up through today, and then maybe a further move down. Otherwise, really, again, you've got CPI coming out tonight, so I'm not really expecting a great deal of movement prior to it all. A little bit of upside, but mainly just consolidating at the most. You got to respect how much they just sold that off yesterday. All right, and onto copper. Copper sort of fighting the good fight and trying to hold in there. It's slowly sort of grinding along. We could almost sort of see a little bit of a sort of rising support come with this here now, actually. If we drag these ones across here, that's looking pretty decent as a sort of line for it to sort of be holding for downside moves. Look, there's a lot of work for copper to be done. We did have that negative divergence. That's on a daily, this one. I think sort of upside targets, again, 41.7. Just look at where we've had the previous highs. So this little level through here, I'll just call this a zone. So we can say, so this zone here, and then this zone here. Really, you need to get out of this channel, but I would say it's good for at least a test of these levels before you make a decision, before it makes a decision as to whether it's going to be going for another leg down. Again, a little bit more upside before potential more down, or obviously then if it does want to break out, well, you deal with that then. So we'll see how that one goes. But for now, really, it's just grinding. It's back and forth. It was pretty unfazed by that PPI data last night as well. I can't find the exact point where it came out, but it was around here, and it really, as you can see, I've marked it out. It's in this tight little range. It just held the range. It was really unfazed by the PPI. It didn't really move much of it at all. Cool. And finally with China. So we had our little triangle that we sort of picked out, and we said, look, you know what? If it's going to hold, if it's going to do something, you want to see it hold this one, and it's come out here. So you can see as soon as it pretty much broke out here, if we zoom in on this a little bit, you can see it sort of thought about it, tried to hold it, and then just gave it up. And it was in a little bit of push up this morning, in line with, as I said, a little bit of a push on US dollar before, probably just a little bit of balancing. This fix mark, this is an interesting thing actually, just on this fixing. This was from the other day, so it was marked out where this line starts. This is where the price was, this is where fixing was, and you see how it just came right up here, tagged the fixing, sold straight back down. Something worth sort of noting with these sort of things as well. Obviously got to do it daily just to sort of mark these ones up. But yeah, so anyway, long story short, I still think we have some downside coming with China. I don't think we're going to sort of see some big revival this time. My big right-hand shoulder is really sort of testing that neckline down over here. So the alert set up down here, that's confirmation. We go down here, I think we've got a big move down to below 7. I would say 690 is where I'm sort of targeting for that. All right, so that's pretty much it for the charts. In terms of the news coming out for the day, where are we at? We've got, for what it's worth, we got RBNZ cash rate expected with a hold there. These things can sort of have some runoff to influence Aussie. But yes, as I said, holding, nothing too exciting with that one there. 4 p.m. we've got the local time Melbourne. We have the CPI out of the UK. UK. Anyway, pound, the BOE, that part of it all. They're expecting a slight tick up. So 2% expecting to come in at 2.3, still well within the acceptable rate. So that's the thing exactly. Like people are sort of like going, okay, you know what I mean? 2 to 3% is our target. Well, it's in that. So even if it ticks up there, it's still not the number one. Remember, they were up around 10% at one stage. And now we've got, 10:30 tonight is the sort of main feature, and that's US CPI, 3%, expected at 3%. It comes in with a 2 handle, then that's going to be the trigger for US dollar to take a leg down. in my opinion. I think you're going to have to get a fairly big jump up, 3.5% or higher, to really see some US dollar buying. Not to sort of say that you can't get a bit of buying with lower than that, but I would say that sort of like certainly I think that to me, I'm thinking that that sort of that part of the conversation's done, and I think recession is the main sort of thing. So yeah, we'll have to wait and see. Anyway, that's it from me. Ciao.